Hey, you there. We know you're working hard, guiding those you serve through changing regulations, evolving business models, getting in front of changing global forces, adopting new technologies at unprecedented speed. Confidence, drive, intuition. You have what it takes to lead.
If I'm to be an effective leader, I need to be always up to date. I need to be rounded up in terms of my emotional intelligence.
Curiosity helps me to broaden my knowledge. I'm used to things changing in terms of my subject matter, and that's why I always try to adapt myself.
For me, I have to demonstrate integrity, transparency, and accountability in handling honest financial matters.
Your superpower? A strategic mindset.
I'm passionate about making a difference. I'm very open to change, and if anything, I like driving it.
We need to give the space the others to say what they need to say, and also to give them the space to understand, because sometimes the words are different, sometimes the meanings are different.
During times of challenges, we tend to stick to what we know best. But do not forget that it is also during these challenging times that we should think innovatively to find new solutions.
You are a problem solver, data specialist, and a mastermind. Your ideas and initiatives drive change and growth. The future of the profession is bright because of those who rise to lead in their own way.
I try to use tools which will help me get my output faster rather than only drawing intelligence from that output.
Advocacy, guidance, resources, serving the public interest, creating opportunity, helping you accelerate and then lead.
I think the next generation has got this wide open world in which they can develop.
Being a member of CIMA has really made me realize that I'm a visionary, because you go through articles that are talking about the future, and I see myself fitting in the equation.
What will be your role in the future of our profession? Hey, you there. We know you're working hard, guiding those you serve through changing regulations, evolving business models, getting in front of changing global forces, adopting new technologies at unprecedented speed. Confidence, drive, intuition. You have what it takes to lead.
If I'm to be an effective leader, I need to be always up to date. I need to be rounded up in terms of my emotional intelligence.
Curiosity helps me to broaden my knowledge. I'm used to things changing in terms of my subject matter, and that's why I always try to adapt myself.
For me, I have to demonstrate integrity, transparency, and accountability in handling honest financial matters.
Your superpower? A strategic mindset.
I'm passionate about making a difference. I'm very open to change, and if anything, I like driving it.
We need to give the space the others to say what they need to say, and also to give them the space to understand, because sometimes the words are different, sometimes the meanings are different.
During times of challenges, we tend to stick to what we know best. But do not forget that it is also during these challenging times that we should think innovatively to find new solutions.
You are a problem solver, data specialist, and a mastermind. Your ideas and initiatives drive change and growth. The future of the profession is bright because of those who rise to lead in their own way.
I try to use tools which will help me get my output faster rather than only drawing intelligence from that output.
Advocacy, guidance, resources, serving the public interest, creating opportunity, helping you accelerate and then lead.
I think the next generation has got this wide open world in which they can develop.
Being a member of CIMA has really made me realize that I'm a visionary, because you go through articles that are talking about the future, and I see myself fitting in the equation.
What will be your role in the future of our profession? Hey, you there. We know you're working hard, guiding those you serve through changing regulations, evolving business models, getting in front of changing global forces, adopting new technologies at unprecedented speed. Confidence, drive, intuition. You have what it takes to lead.
If I'm to be an effective leader, I need to be always up to date. I need to be rounded up in terms of my emotional intelligence.
Curiosity helps me to broaden my knowledge. I'm used to things changing in terms of my subject matter, and that's why I always try to adapt myself.
For me, I have to demonstrate integrity, transparency, and accountability in handling honest financial matters.
Your superpower? A strategic mindset.
I'm passionate about making a difference. I'm very open to change, and if anything, I like driving it.
We need to give the space the others to say what they need to say, and also to give them the space to understand, because sometimes the words are different, sometimes the meanings are different.
During times of challenges, we tend to stick to what we know best. But do not forget that it is also during these challenging times that we should think innovatively to find new solutions.
You are a problem solver, data specialist, and a mastermind. Your ideas and initiatives drive change and growth. The future of the profession is bright because of those who rise to lead in their own way.
I try to use tools which will help me get my output faster rather than only drawing intelligence from that output.
Advocacy, guidance, resources, serving the public interest, creating opportunity, helping you accelerate and then lead.
I think the next generation has got this wide open world in which they can develop.
Being a member of CIMA has really made me realize that I'm a visionary, because you go through articles that are talking about the future, and I see myself fitting in the equation.
What will be your role in the future of our profession?
Good afternoon. You're all very welcome to today's CPD webinar, VAT in the Digital Age, A New Dawn. You will see the Q&A button on the bottom of your screens, and as all attendees will remain on mute for the duration of the webinar, you're welcome to input your questions here, and James will answer them at the end of the session. We will be recording this webinar and will provide you with the link via email after the event. We're delighted to welcome James Fox. As an indirect tax partner who leads the EY Indirect Tax practice in Cork, James advises on all aspects of VAT, related tax for a wide range of clients. He joined EY in 2015, having previously trained with KPMG in Dublin in VAT. James has extensive experience on national and international VAT consultancy assignments, and he has assisted various clients in the course of revenue audits and advises national and multinational companies operating in various sectors. James is a Chartered Tax Advisor, a CTA, and is also a member of the Chartered Accountants Ireland. James also serves as Chair of the Chartered Accountants Ireland Cork Society in 2023 through to 2024. James will also be joined by one of your fellow members, Dermot Cowie. Dermot is a member of the CIMA Southern Branch Committee and has kindly agreed to facilitate the Q&A at the end of the session. With that, I will leave you in their capable hands. Welcome, James.
Thanks, Jean, and thanks, Dermot. Thanks to everyone at CIMA for the invitation today. Delighted to be here to talk on this topic that I hope you'll find useful and that you've given up your lunchtime for. So my name is James Fox, and I'm a partner in EY Indirect Tax, based predominantly in Cork, but all around the country really. And I just felt it was a useful topic to talk to you all about today, because you may be hearing different things about what VAT in the digital age is. You may have some questions, which I'll be delighted to take at the end. But it is part of the ever evolving, I suppose, nature of indirect tax and VAT. That the use of technology is becoming more prevalent in how we do how we manage our VAT on a day-to-day basis. And I think I'm going to walk through today what the concept looks like, what it's going to mean, where we kind of sit within the global landscape, what it means from an Irish perspective, and what we know currently from our dealings with revenue and what they've published, and what next steps should be for someone who might be working in practice or working in industry, like many of you are. And I also thought it might be useful today just to get into as well about other topical updates just for a few minutes at the end. VAT can be a complex area in terms of managing your VAT treatment of your sales, your purchases, your supply chain, your billing function. I just kind of wanted to give a flavor of some topics that may be of interest to you and your members, that you could then consider further. And I'll leave my contact details as well. But it's going to be very, relaxed, informal discussion. I appreciate it's your lunchtime. We'll try and go through it as quick as we can. Diarmuid will coordinate a few questions at the end, and so feel free to put them into the question box as you wish, and happy to discuss further. But I suppose, like, when I get to ask the question about what is ViDA, and what are we talking about here, and appreciate this is a wordy slide, but just to give kind of a concept. So VAT in the digital age is what ViDA stands for. And a lot of what I'm going to talk about today is about e-invoicing and digital reporting and what that even is. Because I'll be honest, when I first heard of e-invoicing maybe a number of years ago, because it's been, in certain strands, in certain countries a long time, I would have thought, oh, maybe that just means PDF, and I'm already doing that. I'm sending my invoices already through PDF. I'm recording my AP invoices that I receive in PDF. And in terms of, what actually are we talking about here? And I get into some of what it actually practically means, and how it needs to link into your SAP system, your Oracle system, whatever that might be. But also, if you think about your, VAT compliance that some of you, or maybe many of you, are doing at the moment, and with a deadline this week for the September-October VAT return. VAT is systemic and has a habit of, if you've done something wrong 1-2 month period, you've probably done it wrong for a longer time than that, and you can be sometimes reliant on the way your information is set up in your system, and the way your AR and AP is coded, and whether something's coming in from abroad or not, does that get coded appropriately. And if you think about the Irish VAT return at the moment, it's quite straightforward in terms of what actually you submit. There's only a certain number of boxes there, really 8 core boxes in there, setting out your VAT and sales purchases, whether payable or repayable, and your level of intra-EU supplies, and then they added a 9th box for the postponed accounting on intra-EU VAT. So in of itself, there's limited information for revenue when you submit as a self-assessed taxpayer. Obviously, behind all that, and I'm sure many of you have seen, there's a ramp up, and I'll discuss it later on when I talk about the kind of key trends. But there's been a ramp up in revenue queries, looking at VAT returns, and obviously getting in behind your purchase schedules, your sales schedules, to understand that the figures that go onto your VAT returns are correct. But at the moment, up to now, and for the next couple of years, at its core, the information revenue get is fairly limited at the start, unless they subsequently audit you. And that is where digital reporting and e-invoicing is really going to come into its own. The days of making, downloading your monthly report into Excel and then doing various manual adjustments to ultimately come up with the figure that goes into the VAT return is going to get harder to do, because it's going to come back to how important your source data is, setting up your sales, your purchases, your coding correctly. Because ultimately there's going to be more and more information shared with tax authorities in real time, or as close as possible to real time, which, in a sense, is going to bring obviously a challenge for businesses in having their systems lined up, but also allows a great opportunity to clean up and to tidy up, a lot of the manual steps that companies have to take. Like, I talk to so many people in industry that, when they're doing their compliance, have to cover the same issues again and again and again, because the system maybe doesn't, do everything that you would like it to do, and that they have to factor in various manual checks or manual adjustments or postings, etc., that ultimately get to the VAT return. That they would only love to have the time to maybe go back and actually do a data cleansing exercise to clean up some of this and work with their IT provider, but just don't have the time because month to month you're living in a compliance cycle, a deadline. So it's with that in mind that so this has brought in ViDA to it's really going to lead to a fundamental change. And there is three pillars. And we'll mainly focus on the invoicing and digital reporting one. I'll get into that detail on that shortly. But there is also elements around the platform economy and in short-term accommodation and rental by clarifying who will actually collect the VAT in those circumstances, and also reducing your registration requirements being the third pillar to expand the scope of one-stop shop. So if you think about it, you might have some situations at the moment with your businesses or within industry that you might have an Irish incorporated company registered for VAT in Ireland, but you might be registered in 27 different EU member states because maybe your company is moving its own goods across to different all these jurisdictions and having to have that multiple registration, and then you get the complexity of whether you're selling to business or business to consumer, and that can lead to multiple VAT registrations. So it's about trying to simplify that well, if I move my own goods and it's for business purposes, maybe I could have a single EU-wide registration, like what's there already that many of you may have seen with the one-stop shop for electronic services and for e-commerce. So look, it took a long time to get that unanimity at ECOFIN, at the European Economic and Financial Affairs Council, but ultimately in November 24, these three pillars were agreed. And we've had a lot of discussions, and even I think Jean mentioned there, I was chair of the Chartered Accountants in Cork. We would have had, discussions with Revenue. They would have done a seminar, kind of on a roadshow around what ViDA was going to be, and very much aware that it will be a journey for businesses. And trying to get, and we'll talk about in some of the slides that I have around the different pillared approach that Irish Revenue are going to take on this, because it's going to be a step change, and you've got businesses that might be doing 3 to 5 year budget plans and trying to work out, well, what does this mean and how much is it going to cost, and what capacity resources will I need to have my system in line to meet these requirements. So we'll get into some of that. But Irish Revenue are aware, I suppose, that PAYE modernisation came in 2019, and they would have had a collaborative journey, I guess, with taxpayers on that, and I think typically would like to follow a similar path, if they could be as practical as possible on it. And I think that's why you'll see they have a kind of a phased approach in terms of what they're looking to bring in as well. But when I look at like this map, it's like a geography lesson here for a second. And it's not like the World Cup draw or anything like that was going on, but it's just it's just to show that on a global level, there's a lot already been done outside of Europe in an e-invoicing perspective. Like if any of your companies that you might work for are involved in global trade, you may already be meeting requirements in Saudi or Egypt or any of those countries on screen there, and have had to have maybe certain pieces of software bolted onto your system to meet those requirements. So it's and even certain European Union countries are firing ahead, bringing in their own e-invoicing, and the likes of Germany, Belgium, and others as well. And there can be real nuances as to what services and goods qualify, established versus non-established. So it can get complicated quite quickly. But I think it's just to show that, like, again, it's all back to this VAT or GST as it's called in some countries. It does lend itself to the use of technology because of the repetitive nature of most transactions, the similarity of supplier and customer that you would have for the majority of your transactions. And you'll see when I get to the trend section with Irish Revenue later on that, and maybe you're already seeing it in your own roles, but that there's a lot of data analytics reviews now, and just finding holes in interrogation reports that maybe are all explainable, but that just lead to good questions by tax authorities. And this is trying to help, I guess, stop that earlier in the process. But I think it is important actually to stand back as well and say, like, and I talked about it there, my old kind of flippant point on e-invoicing, but what is it, and being PDF or not? But it will be effectively like every transaction will have its own unique identifier number, and that you'll run through the system. And it's already been very popular in Latin America, and obviously softened the map there, and EU plans are ongoing as we work through ViDA. And it will be submitted on a per transaction basis, so that to the extent you're making a sale from Ireland to Germany, for example, like both the Irish and German authorities should ultimately be able to know what that e-invoice tracker was in the format that you submitted it through through the software portal, that both Irish revenue on the AR side and German revenue on the AP side can see what that can see what that transaction relates to. And you'll see in a second I have a slide about why they're doing that in terms of trying to combat EU fraud, to see that that the transactions are being recorded appropriately. Because we would see, at times, and probably becoming more prevalent now, is that level of mutual assistance, I think as it's called, between tax authorities around Europe, are leading to questions for some of our taxpayers that, you could get a letter from Irish Revenue saying that we see your company made a sale of goods to a company in France, and we don't see that it's reported appropriately on on your Intrastat return or your VIS return or whatever it is. So like that's come about because someone in France has said something to the French authorities, which then flips back to the Irish authorities, which then flips back to you, and that's it's because it's all becoming more interlinked, which makes sense. And that's why having that commonality of invoicing that format will allow for that information to be more visible to tax authorities up front. And that's going to bring, it's not necessarily to be scaremongering on it, but it is going to make it even more important that your data is correct, and it's going to make it more important that those, the days of raising cost plus invoices in Excel and things like that are going to get tricky because you need everything to run through the system. And I'll talk about what your company should be doing at this juncture, but it is something that it is going to fundamentally change things. And similarly with in electronic reporting, digital reporting, that might be there for some of you already with some of your clients, particularly in Spain. Like for example, you think you have to upload your invoices every 4 days. Poland, I think, effectively has got rid of the VAT return. It's almost like a SAFT, as they call it, standard audit file for tax now, where you have a set number of columns, you upload all the information, and the authority has that. And ultimately, that's where it's going, kind of more broadly around Europe anyway. That they will have that information on file in a certain format to allow them to see that you've reported it correctly, and ultimately e-invoicing will generate that invoice in the electronic format for that digital authenticity, typically be put through to the tax authority platform for approval, and then ultimately come out the other side, so that both tax authorities are happy that from an AR perspective and an AP perspective, that it's there, and it obviously has a storage and it has a unique identifier number, and it has that level of authenticity then. So it'll very much be there, and as it says more data more frequently. It's just all going to be there for them. And there is a piece, what it'll mean domestically down the line. At the moment, I think it is really just going to be intra-EU, but you would have to think over time more domestic transactions are going to get captured within Ireland and beyond as well. So that's why I think I kind of have mentioned it a bit, but we would ask, or we would have asked, I guess, at times, or people would ask us, like, well, why do we need all this? Is the system not working the way it currently operates? And I think it is, as I said, to try and leverage the use of technology for those repetitive transactions across VAT to help capture the reporting. I mean, when you get a sales or purchase schedule, like quite often, if you looked at it, like if you ran data tests through it, you could see, well, why don't the net VAT and the gross match? Or why don't you have sequential invoicing? Like how come all your invoices don't match in terms of your AR AP in terms of sequential order? Or do a buzzword check, which is often done, like to see, did you recover VAT on food, drink, entertainment, Christmas party, summer barbecue, all these kind of things. They're all just quick wins for tax authorities. And that's where technology helps in terms of that review, and really just is just the next step within that. And to combat that VAT fraud as well, like, I mean, for example, obviously, I know if you had a good reconciliation process, this shouldn't happen, but it does happen sometimes where you might claim VAT twice on an invoice due to the cutoff on your posting, that, an invoice is dated at the end of November. But it doesn't get posted until December, but then it gets still reported in November VAT return, but then also gets reported in the December return based on the posting date. It should be avoidable with a proper reconciliation, but you'd be surprised, doesn't always happen, or potentially doesn't always happen. So that that should be avoided now by virtue of having that every transaction having that unique identifier and being able to follow what is going through the return, certainly leading to that greater harmonization, as I mentioned, that mutual assistance piece between tax authorities authorities that, even though VAT is an EU-wide tax, different countries do take different approaches, both practically and legislatively, due to the directive allowing that wiggle room for tax authorities in certain cases. But it should just lead to that greater harmonization and approach, and probably certainty for taxpayers as well. Like, there's an element of that. It should bring certainty for taxpayers, because sometimes it can be a challenge to say, well, maybe Ireland might be okay with this, but maybe Germany wouldn't, or vice versa. Hopefully that should become more clear now going forward for that level of consistency. I know it mightn't feel like it, but there should be reduced compliance costs over time, in terms of, as I said, my example, if you were an Irish company that had multiple VAT registrations for moving your own goods abroad, potentially you could have that single VAT registration, which should report all through one return, and ultimately have that reduced compliance costs. And it should also, look, it is going to enhance revenue from their perspective, in supporting early identification and resolution of discrepancies. Look, for anyone who's on the call who has been on revenue audits, obviously the earlier you can resolve matters and show that level of cooperation, the better. And this should help weed out issues earlier in the process as well. So, like, this slide again is just the three pillars really, well, which the main focus is on the e-invoicing one, but just maybe to cover the other two quickly in a bit more detail. The one in the middle, the platform economy, is going to effectively make the deemed supplier of short-term accommodation or or passenger transport to be that platform provider. So at the moment you might have, say, someone who's renting out accommodation on a platform, and maybe perhaps not registered for VAT. It's going to put the onus on the platform to actually, become that deemed supplier. So it allows a greater level of, I suppose, scrutiny to be undertaken, and control, I guess, for the tax authority as well, that the platform will become the deemed provider. And similarly with passenger transportation. So there is going to be certain exceptions there, and it's coming in January 2030. And look, it's not something that we would have to look at too much on a day-to-day basis, but it is one of the platforms of ViDA, as I said, and it probably feeds into the overall piece about more and more I suppose commerce happening online now. Think about all our daily lives, and a very key part of that is who becomes the party responsible for VAT. It's already been there to a large extent. If you think about any app that you might buy on your phone, some of them will be free, but if you had any in-app purchases, or if you actually paid for the app, the question often comes up, well, who's remitting the VAT on that? Like, is it the app developer, or is it the platform that you might have bought the app through? Similarly, if you buy goods through a platform at the moment, or any I think we all know websites where you can buy goods from different sellers. Like, who's accountable for the VAT again? Is it the initial person or the platform? So it's just all part of that kind of agenda in tracking e-commerce. And I think accommodation and passenger transport have been areas that they wanted to ensure that there'd be proper taxation on. So look, unless you're specifically working in those areas, or maybe have rental in those areas, it might impact you further, but otherwise it's maybe limited. And I think the other one is that single VAT registration, and it's just building on, and that one-stop shop that's there, building on the deemed supplier piece for non-EU businesses. I think that single VAT registration, where you move goods around, your own goods around the EU. Certain of these will come in July 28, others are coming in July 27. But again, it's all back to that harmonization of VAT. And again, if any of you work in an industry where you're supplying goods to B2C all around Europe, or if your company's supplying software all around Europe, B2B, or B2C mainly, then you're probably already doing one-stop shop returns, which was brought in 2015, originally called MOS, Mini One-Stop Shop, then evolved to be called OSS, One-Stop Shop. We love our acronyms in VAT. And this is just going to be an extension of that. And again, it's in theory to lead to that greater harmonization around Europe, that kind of reduce compliance in one sense, instead of filing multiple returns. But it has brought in a level of, I suppose, challenge where you have the UK involved as well, with the UK not being in the European Union anymore. So again, if any of your companies that you're working for were involved in supplying software to the UK, supplying goods to the UK, Northern Ireland, there's elements there to watch from a VAT perspective as well, because the UK not being in the European Union anymore, so you're not falling within that piece. But then Northern Ireland is within the EU for goods and not for services, so just to add more complexity to it. But look, I think it's just those, pillars 2 and 3. they don't get as much attention as Pillar 1. In terms of ViDA, they're still going to be, you know, important ones to work through if you're within those industries or if you're within those sectors. But I think, you know, more information will come over time from Irish Revenue, I would expect, and other tax authorities. But really the main one that's drawing attention is and which was even obviously brought up in the budget this year in Ireland, is about e-invoicing and digital reporting. So e-invoicing will become across the EU, the new default rule for B2B invoicing from July 2030. The reason I have a hashtag or a asterisk beside 2035 is I think if you already have, and if a European Union country has if already has an e-invoicing system in place, then they don't officially need to harmonise with the EU standard until 2035. And that's going to be, they may do it sooner, but that's the challenge, because every country might, if they paddle their own canoe and have a slight little nuance on the type of fields that they want you to put into the data or the digital reporting, or fields that they want you to have in that e-invoice, whereas ultimately you want to have an EU standardized approach. So you're going to have a 10-day deadline to issue invoices for specific intra-community supplies, reverse charge supplies, or intra-EU services, and it'll be done through an XML format, not PDF, like I said earlier, an XML format that will be prescribed. And even Irish Revenue have touched upon the technical specifications are probably yet to be fully determined upon. But I mean, in some countries, if you already have been invoicing government agencies, you'd have to do it through an XML e-invoicing format for B2G, as they call it. So it might lead to that similarity there as well. And look, there's going to be, you know, certain fields that are going to be required for invoices as well, which will come in play. I suppose good news for anyone who does a VIS return, or an EC sales list, as it's also called, is that effectively will be replaced, because they'll already have the information on your intra-EU supplies. So VIS returns, for anyone who does them, are to monitor intra-EU movement of goods or services, a nil threshold for doing so, where you have to file, and ultimately that's going to go away when they've already got that information, because they'll have seen the invoice that's issued and seen the digital reporting, and there'll be allowances for additional requirements as well as you go along. So, you know, there is going to be challenges around things like credit notes or discounts and how you manage all that. And some of the items, you know, are still to be determined, and we'd expect a lot more movement next year. I think Ireland is the European Union president for the second half of 2026. So we'd expect Ireland to, you know, delve into it even more, and to be probably trying to help lead the agenda as we move in towards 27. And so we will get more information there, but you know, it's going to become that default rule as we move into 2028 in Ireland, which I'll talk about shortly, but certainly from a 2030 from an EU perspective. Like, I suppose the main thing then, if I turn to Ireland for a second, is that Irish Revenue, you know, would have mentioned in the budget in October about that they were going to issue a plan the following day, and that modernisation plan was published on the 8th of October, with the rationale being that it provides an opportunity to modernise our approach through the introduction of domestic e-invoicing and real-time reporting systems. And it reflects our objective to redesign VAT administration. So if you think about the VAT return, like I talked about earlier on, it's going to look a lot different, to better integrate with normal business processes and reduce compliance costs for tax compliant businesses. So, you know, that is so important, because like any revenue interaction or tax authority interaction, probably these days, a lot of it comes down to your process, your control, and your management of risk. Like and that's where the use of technology should hopefully help weed out, you know, where errors have arisen, where there might be potentially cases of fraud, that ultimately, if you've had to raise your AR invoice in a particular format and the tax authority has sight of that, and then the other tax authority on the other end also has sight of it, through the portal that'll be there, then that should take away that you know, that capacity for fraud to arise, or for certainly reduce errors as well. And what they've said is they've broken it down into a 3-phase approach in Ireland. So if you think about it, standing back and not throwing a lot of dates at everyone, and sometimes when I mention ViDA, people hear 2030, it sounds ages away, but I guess we're almost already in 2026. And you think about how hard it is to get any kind of project through, you know, in terms of IT related, it can take time, and getting the appropriate budget. But Irish Revenue have effectively said they're going to bring in it for Ireland a 3-phased approach. That in November 2028, so in 3 years' time, there's going to be mandatory e-invoicing and real-time reporting for B2B domestic transactions. So that's just going to be, they've said at the moment, for VAT registered large corporates. Now, they haven't defined exactly what large corporates is yet, so we have to wait and see who falls exactly into that. But effectively, you're going to need to, if you fall within that space, from an AR perspective, selling B2B within the Republic of Ireland, they're going to have to be put through e-invoicing and real-time reporting. So look, more information to come obviously on the technical specifications, but that's the first phase of how they're going to manage that. And as you roll in the following 12 months in November 2029, it's going to bring in any VAT registered business who's engaged in intra-EU trade. That is going to be an interesting one, because you could be a business that kind of, now and again buys from France, or now and again buys from Germany, goods or services. And technically you could fall within that then for any domestic transaction. So it's almost like, to qualify, you'd have to be carrying out intra-EU trade. But once you are in, you're capturing your domestic transactions. So that will be where I think, and that's probably why in 28 they're going with the large corporates first to get them on the journey, but then have the education process probably as we roll into 29 to talk about, what needs to be done with companies' IT systems to get the portal or piece of software or whatever it might be, to be able to put their current SAP Oracle system AR invoicing into create an XML format invoice, and ultimately how am I going to upload my AR and AP information? How am I going to real-time report that? These are all things that have yet to be kind of fully worked through with revenue on it, but they've given that roadmap as to where they're going to get to. And then by July 2030, which is to align with the EU timetable, that if you're that you'd be captured for all intra-EU transactions. So again, in November 29, you would have had to capture your domestic, and then 7 months later or 8 months later, you'll have to capture your intra-EU as well. So by July 2030, from an AR perspective, if you're an Irish company and you're dealing in intra-EU trade, you'll be recording your domestic and your intra-EU through e-invoicing and real-time reporting. So, but the kind of kicker, which is interesting as well, is that even though you mightn't be relevant to come into play until 2030, from an AP perspective, you're going to need to be able to receive e-invoices from suppliers in November 28 onwards. Now, look, as I said, it's only VAT registered large corporates that are going to be required initially to issue those. But you as a customer, if you are a customer of a large corporate, are going to have the ability from your systems perspective to receive an e-invoice. And that creates, questions sometimes from clients. Well, what will that mean how do I make payment? Like, how do I manage that? I might get a PDF kind of for the purposes of recording my AP and maybe tracking for treasury and payment purposes. But then from a I suppose a VAT legislation perspective, I need to make sure that I've received that relevant invoice or that relevant e-invoice, and what happens if I don't receive that? Like, we would hear anecdotally at times that certain countries might challenge VAT recovery for the purchaser, the AP person, if they haven't actually received an e-invoice, even though the e-invoice issuing obligation was on the vendor, that you as a purchaser might have a challenge in getting VAT back. Now, that hasn't been indicated too stringently or anything here yet, but that's the kind of challenges that we're thinking about. Well, what does it mean if I don't receive it? Like, and who's the onus on, and what does it mean for my VAT recovery, and all that, and that'll roll in 28, 29, 30 onwards. But that's where Ireland are at on it at the moment, and it's going to be interesting to see how it evolves over time, and how that technical specification, which I move on to, that okay, like there's a European standard that is with structured data formats. So you're going to have to work, if you're in finance, with hand in hand with your IT team, and getting that. Appreciate anyone working in finance, and if you're trying to do projects, that there can be different competing priorities, and hard to get everyone on the same, if the train is leaving the station, in terms of getting any kind of IT, SAP, Oracle upgrade, or whatever system stage you might be on, and making sure that e-invoicing is up high on the agenda, because you're going to have to require, from an AR perspective, and meeting certain standards to allow that automatic processing. But they are going to use existing infrastructure and lean on, for example, as I said, Irish public sector already requires e-invoicing since 2019 for B2G, business to government transactions. So if you have any businesses that are currently doing that, then at least that shouldn't be completely new to them as it evolves further. But like for your standard SME who buys and sells a bit around the EU, this is going to be a journey, like from both an AR and an AP perspective. how am I going to make sure that I align my system to be able to create an XML format e-invoice, or to receive an XML and store it, and what that means in terms of how I upload my VAT return, like whether you'll get to a stage how will the VAT return evolve over time to still be in place. Who knows? So I think it's going to be interesting how it all evolves over time. But that's kind of what they're looking to work through on it. And I think if you are in your business, or what you should do today, after this call, apart from getting back to the day job, is like, well, like, are you confident in your source data? Like, no one's data is perfect, being perfectly honest about it. And there's always certain things that you'd love to have the time to, go back and fix that from a master data level, have a conversation with the AR team, have a conversation with the AP team, manage your PO process, manage how items get coded in the system. But often it's like a hamster wheel, meeting month to month, compliance to compliance deadlines, and just don't allow that opportunity. So when we talk to clients about, how comfortable are you in your data, and 2030 sounds ages away, I'll sort it out. But like, will you really? Because I mean, it takes a long time to do anything in the IT world in terms of those projects, and you don't feel 3 months, 6 months slip by. And I think staying close to revenue as they work through probably education, and kind of collaborative approach that they should hopefully have over the coming couple of years, will help businesses get on the road. Because in simple terms, it'd be great if there was some, and I think it is starting to get there, where effectively your IT system would, um, take a bolt-on piece of software or tool that would put it through, create that XML that you can have access to, either manage it yourself or indirectly, through a service provider, to then create that AR, and then subsequently receive those AP invoices. And I would say consider having workshops is also something to think about. Like, but it involves all parts of the business. Like, it's going to involve your finance, your AR, your AP, your IT, your master data people, your supply chain people. Like, where do we sell? Where do we buy? Legal flow versus financial flow. All that kind of comes into play. And reviewing potentially invoicing suppliers. There's plenty out there in the market. From ourselves to others, obviously, as well, and all the IT specialists. So there's different solutions that are out there, and what works for your business. But it's essential to set up your systems correctly to try and manage that high level of automation. And really, if it's not managed, it can create a substantial risk. Because if it could end up causing operational disruption and reputational risk. Like, back to my point earlier on, that if you were an AP recipient, and if it had some challenge, if you were audited and you had some challenge in terms of getting VAT recovery, because maybe the invoice was never issued to you by the supplier, maybe they didn't follow the correct format. Or does that create a challenge in terms of that approach then? And reputational and relationship risks that could bring. And these are going to be, more targeting of taxpayers for risk profiling, and leading to increased audit activity. And we'll probably see that when I talk about the trends in a few minutes. But you know, the tax authorities are getting smarter as well, in terms of, well, this, you told me this answer for VAT, and you told me this answer for corporate tax, and you told me this answer for payroll tax. Like, which is it? Without being too flippant on it. So, like, it's getting that kind of micro level of management that will be there, and having that. And I suppose it is not to be scaremongering. Like, it is ultimately to try and get to greater efficiency, and take away the manual adjustments that can sometimes happen. But it's to try and manage that level of audit activity as well, and obviously the penalty and assessments that can arise where you don't do the right thing, and try to manage that business process and change that can come with it. And really, the opportunities are there to, as I said, to reduce the human error and enhance data quality and management of for analysis. And it actually should allow to see from, like, your trends, like, depending on the industry you work with. If you work in retail, maybe you expect your VAT returns to spike towards Christmas or whatever, or building up stock in the autumn. And if you're, if you're some sort of tourism or hotels, maybe your summer period will be busier. So it's kind of, you already might be doing that within your organizations. But I suppose, the key takeaway I would say is that, don't just think 2030 is a long way away. You will have an action by November 2028, from an AP perspective. Certainly AR, starts rolling in November 28, November 29, ultimately July 30. Expect Irish revenue to evolve further in terms of, working through with taxpayers and what it's going to mean. But I think having a discussion, or if you have some sort of internal meeting or strategy workshop coming up, VAT e-invoicing should at least be on the agenda. Like, how are we going to deal with this? How are our peers dealing with this? How are our customers or suppliers dealing with this? um, and just trying to work through to try and simplify the process to take away, the level of noise that might be out there, and say, look, at its core, my business will still continue day to day what I do, but I now need to create my invoice in a certain format, receive my invoices in a certain format, and have my data in good shape to take away that level of manual intervention. So that's kind of, the key takeaway on ViDA, I would say, is back to the data. The data will make or break you in terms of your AR and AP, and you might get a 2-month audit that could turn into a 4-year problem very quickly, because you've done something wrong all the time, even though maybe only a 2-month period was initially asked about. And that level of interaction as you move across the EU will become more relevant as we go along. So look, just kind of maybe for 5 minutes, I kind of wanted to maybe change tack a bit to talk about just some common other trends. I've touched probably on some of them already throughout the ViDA piece, because ViDA, as I said, is at its core is back to your data, and back to having that e-invoice and digital reporting piece down. But I think it would be good just to talk for a few minutes about some other trends that we're seeing across AR and across AP, and then moving on to the Q&A then. But like, I suppose, as I said, look, there is extensive data analytics checks and revenue audits these days. You may have seen it already recently, where you would, maybe get an audit notification, and revenue want to get all the information up front, or want the information in a certain format, or perhaps even want their IT team to talk to your IT team, and getting that lined up, and running those various data analytics checks that maybe are all explainable. But back to my point earlier, why did you recover VAT on Christmas party? Or why did you, why don't your net VAT and gross match? Or why don't you have sequential invoicing? Or why are you billing an Irish customer but you didn't charge VAT? Or, some of these could all be explainable, but it's just good questions, thought provokers. And I think working through your offer, if you do have to go through the audit process and you make a settlement, that they can take time to work their way through. And again, it's all based on evidence. Like, you can talk till the cows come home about you intended to do something as a business, or we have this plan to do something over time, so we should be entitled to that recovery. But, like, have you got the paperwork to support that? Have you got the business plans? Have you got the minutes from your meetings, etc.? That's very important, having that written support. More and more multiple tax head audits as well. You might have seen that. Sometimes it is just VAT. Quite often VAT and POE get pulled together. Sometimes obviously it can be all tax heads. But again, that's back to my point earlier, that an answer you give for one tax head could have a knock-on impact on another tax head. So you need to be careful there. And that's where it's getting that level of consistency. Revenue changed the process 3 years ago to go level 1, 2, and 3 in terms of approach. So level 1 was the old style aspect query, still kind of at the most light touch piece of revenue intervention. Allows for an unprompted disclosure still to be made. Level 2 is more serious, when there's a specific risk or a risk review, or you're into prompted territory. And level 3 is cases of fraud or further interrogation, which thankfully don't see too often. So I think it's just to watch that sometimes you might deal with a level 1 that could very quickly escalate into a level 2. Still all manageable, but early engagement is key. And look, it's just about simple things like around, well, it sounds simple, but it can be difficult, I guess, in practice, is your process and your control. Like, have you got it written down somewhere how things are done in terms of the process of you doing a VAT return? Or is it just that one person has always done it that way, and it's all in their head, and if they were, God forbid, sick tomorrow morning or left tomorrow morning, no one would have a clue what to do? Like, you don't want that type of situation arising. You want to be able to show that you have a continuous improvement mindset, that if you do spot something, you take corrective action, that you continue to look at your procedures and your controls. Like, that goes a long way with tax authorities, at least in showing that you're trying to do the right thing, even if you still have a liability. And that kind of comes back even to the next point about reconciliations, that, are your VAT return, can you reconcile your VAT return to your annual return, to your corporate tax return, to your financial statement? And it can be tricky, because they can all have different elements to it, and turnover for accounting could be different from a timing perspective to turnover for your VAT returns. But it's just trying to link up your tax heads, and something to keep an eye on. In some cases, you might then make, where you say, well, okay, hands up, maybe I should have charged VAT on a sale. But look, even if I had, my customer would have been able to reclaim it. So there's no ultimate loss of VAT to the exchequer. And you try and avail of maybe a reduced penalty or whatever. Again, that has to be proven to show that your customer could have reclaimed. Sounds okay in theory if you've only one customer, but if you've hundreds of customers that you should have charged VAT to, it becomes a challenge. So there are kind of some of the trends that we're seeing across VAT, and kind of generally, like from a sales perspective, I know it sounds simple, but making sure you have the right rate of VAT on your supplies of goods and services, like particularly if you work in retail, you work in pharmacies, you work in selling goods generally. Like, have you got the right VAT rate? Because a wrong VAT rate could be an expensive mistake. Quite often you could have an end-to-end supply chain that's complicated. Maybe you've only one physical movement of goods, maybe Ireland to Germany, but you could have 4 back-to-back transactions, flash title, A sells to B sells to C sells to D. How does that get recorded for VAT? Where did you actually do the cross-border transaction? What does that mean for Interstat, for V's, for e-invoicing down the line? So all that kind of stuff becomes important as well to watch. Like I said, the invoice numbering earlier is something that is important to try and have there. Where you're in a business, that there could be a high volume rebate or discount for meeting certain targets, just making sure that they're carried out, recorded appropriately. And also just having that documentation about like you'll often see if you've had to go through a VAT registration process recently, there's more and more questions asked about your own diligence. Like how do you do diligence on your suppliers? How do you do diligence on your customers? How do you get happy that your recipient actually is VAT registered in Germany and it has an office in Munich? Like what have you on file to support it? It's not someone down the road. All these kind of things are important in terms of that treatment and supporting your controls. And if you have any canteen in your organization, particularly if you're working in manufacturing or manufacturing, I suppose, mainly, but in pharmaceuticals, etc., there can be complexity around your canteen and, whether you have an outsourced provider and are they a principal or an agent, and all that can be quite tricky as well. And sometimes your business might just have one-off sales of equipment, or sales of assets, and it mightn't be your normal day-to-day trade, but there can be a VAT knock-on impact on that as well. So certainly one to watch as a general trend across your AR piece. And then finally, from an AP perspective, like I think one of the main topics is about VAT recovery and professional fees. Like if you look at your legal and professional spend each year and compare your VAT answer to your corporate tax answer, and why did you claim all the VAT back if you didn't think it was wholly and exclusively for the purpose of the trade for CT, but maybe it was capitalized, then there's certain arguments you can make. But there's been a lot of case law around professional fees. So if any of your organizations are buying shares, selling shares, restructuring, refinancing, succession planning, share buybacks, anything like that, just usually professional fees. And sometimes the kicker is as well, it's not always Irish suppliers. So at least if it was an Irish supplier, you more than likely got charged VAT, so you can quantify what the VAT at stake might be. Quite often you've got non-Irish service providers billing you as well, who probably didn't charge VAT because it was cross-border. So inherently you have to self-account reverse charge for VAT, so that VAT's at stake as well. It's just something to look at, looking at your legal and professional spend in your accounts. VAT and property is always like you could do a full session for 3 hours on VAT and property, but again, leasing, acquiring, selling, intercompany use, all that's very important. Managing refurbishments, developments, there's a lot there to consider, and just making sure you are entitled to the VAT back. The low-hanging fruit, you'll excuse the pun, around food, drink, entertainment, Christmas parties this time of year, just simple, quick wins for revenue. And as I said, usually if I've done it wrong in 2 monthly period, I've done it wrong for 4 years, so it doesn't be long ratcheting up. Making sure your invoicing from an AP perspective is correct, that you're happy who did actually invoice you, where the invoice from, that you have the VAT amount that backs up your VAT recovery, your reverse charge, that if you're buying and selling, if you're buying goods or services from abroad, that you actually do put got an invoice in for 1,000 from Germany, put 23% VAT on one side, 23% VAT on the other side of your return. Be surprised how often that may not happen. So it's just important to watch that. And also, even though we're whatever 4 or 5 years nearly down from Brexit at this stage, still has a knock-on impact on managing that movement of goods, managing that temporary movement. You send horses over to England on a Saturday for racing, bring them back on a Monday. How does that all work from a Brexit, customs, VAT, supply chain piece? And also where you bring goods obviously in the UK as well. Something to watch there. There is a 6-month rule technically on sometimes you get asked by revenue for your aged creditor listing. And if you haven't paid a supplier that might have invoiced you more than 6 months ago, technically you're supposed to reverse out the VAT that you might have already reclaimed. There can be situations where you can avoid that if maybe there's valid commercial reasons why you haven't paid, but again it becomes a challenge to work through that. And motor vehicle policy is a big one, linking to your PIE and BIK piece as well. That if you took one position for PIE and BIK, but then you might have recovered all the VAT, or is it a saloon car? Is it a commercial van? Is it a Jeep? There can be different rules around VAT recovery there as well. And usually would be something that would come up in an audit, particularly if you had a fleet of vehicles on the road, whether that's because that could be across whether you own them, HP them, or lease them. So a lot there. Look, I often sometimes do feel like the Grim Reaper in some of these discussions, but I just kind of wanted to set the scene, kind of where we're at the end here from a trend perspective, but also more generally where ViDA's headed. My details are there, and happy for anyone to reach out on this or through LinkedIn or whatever. But I think in summary, the data is going to be the one to bring back to your businesses. If your business will be going through an IT upgrade, if your businesses will be going through a system review, to build in the fact that there is these changes coming that you need to be abreast of, and to try and get to a situation where you can be comfortable that, well, if we are getting a piece of software to help us support on our e-invoice creation or e-invoice receipt, that we can be confident in the data that we're obtaining. So look, I think it's been really great to talk to you all today, and happy to take any questions now, but appreciate I've covered a lot there, but just kind of wanted to give that flavor as we come towards the end of 2026. So Diarmuid, happy to link in with yourself now or any other questions that might arise.
That's great, James. Thanks very much for that presentation. That was excellent. Very informative. We do have a number of questions. The floor is open. If anybody has any other questions, feel free to drop them into the chat now. And as they come in, I will curate them and get James's answers. I'll start with the first one here.
Yeah, sure.
Do you see monthly or annual VAT compliance being abolished after domestic transactions are also harmonized with EU VIS by 2035 or earlier?
Yeah, not to talk ourselves out of a job or anything, but you could see how VAT returns could potentially fall away. That at the moment, as I said, you only have to give 9 boxes effectively on your bi-monthly return or whatever. And I know the annual statistical return you have to give more detail, but revenue don't see the information behind that unless there's an audit or a review. Whereas now they're going to have the invoice data, they're going to have the digital reporting. So what will that mean for VAT returns down the line? So look, and as I said, some countries around Europe have moved to more of a standard audit file that you upload as opposed to a VAT return. So yeah, I think it's something that could happen and one to watch, right, for sure.
Thank you. Next question. When the invoices are going through Irish Revenue, is there still a need to check tax compliance certificate for each supplier when processing the payments?
So just to understand the question, yeah. So just as in a tax clearance cert, I'm guessing, is that what they mean? But I suppose that's just more around your controls. Ultimately, yeah, ultimately Irish Revenue will have the AR and the AP information that you've had to receive, either an AP invoice or issue an AR invoice. So they should have all that information. I think something like that will probably come up more as we go through the process.
Adrian, if you wanted to provide a little bit more context for that, please drop the question please drop your clarification question in. I'll move on then. Is the VAT invoice issue date and VAT invoice receipt data, sorry, my apologies, I'll start the question again. Is the VAT invoice issue data and the VAT invoice receipt data revenue requirements separate? Are they separate?
Well, I suppose they'll be so doesn't at the moment, even today, right, an invoice has to contain a certain level of information, like all the way through from your name, address, VAT number, net VAT, gross, what you've supplied, and that's both from an AR and an AP perspective to support recovery. So similarly, from an e-invoicing perspective, there'll be a set number of fields that you will need to complete within your XML. That, like, your e-invoice won't be valid unless it has this information from both an AR and an AP perspective. So once you tick those boxes and meet those fields required, then you'll be you'll be you'll be valid then at that stage. I see Adrian's piece there about for public sector bodies. So as in, it's for public sector bodies. Well, I think typically you would still get a tax clearance. You have to check that they have a tax clearance certificate before you make that from a payment perspective. But I think this is more about actually tracking your VAT issuance and receipt of invoices and then following it through with your VAT reporting to make sure that is tracking that intra-EU supply and by 2030, but Ireland obviously bringing in the domestic e-invoicing for large corporates in November 28 and other businesses in November 29.
What's the definition of a large corporate, James?
Yeah, well, this is still TBC, I would say, Dermot. Yeah, like, I mean, there's a piece whether it'll mean companies in large cases division or the cooperative compliance framework, or whether they'll have a different kind of stratosphere of based on turnover or what. But yeah, still TBC for sure, and something that is raising questions. We expect more information probably next year, hopefully. So am I familiar with the PPAL system used by universities for reinvesting? Well, I've heard of it. Yeah, like, as in, if you were issuing an invoice to a university or whatever, you'd have to upload it through a certain system. But I suppose it is kind of linked to that. There's a saying, Ireland are going to leverage the fact that they have e-invoicing for business to government since 2019. So, I think anyone who's had to do that should hopefully follow a similar format. But back to my map earlier on as well, like, if you're working in a multinational that might already have e-invoicing in play in certain non-European Union countries, at least it shouldn't be completely new to you. But it's more the SME sector. It's going to be a big, change.
Question here from Donald Dilworth. If you're a large multinational but with low domestic transactions, can that multinational skip November 28 and only get caught in the net in November 29?
I don't know. They're going. So if you're a large multinational with low domestic, can that multinational skip November? Yeah, again, a good question. It's going to come down to what they consider large corporates or not. Like, and does it matter where most of my transactions are? Because if you think about a lot of our large multinationals, a lot of them would have VAT 56s as well, who would mainly sell manufactured goods or to leave Ireland. Or if you're a large multinational software company, maybe a lot of your customers are outside of Ireland currently, but you're still maybe a large corporate for the purposes of Irish revenue. It's just you're not a large Irish VAT taxpayer because most of your customers are outside of Ireland. So that will be something that'll have to be worked through, because you could see maybe an argument for that. If you don't have that many transactions, well, could you fall into the following year, or will they just apply a base if your turnover is above X, or if you're within this division of revenue you're caught? So that kind of stuff will come out.
Conscious of time there, James. Just want to conscious that people may need to grab a quick bite to eat. So look, we'll just take one last question here,
cool.
One or two last questions. We'll take the second last question here. What will be the requirement if you do not reclaim VAT, as you do not issue VAT invoices?
Well, just because you don't reclaim doesn't mean you shouldn't still be issuing. If it depends on your income stream and where your customer base. But, like, again, if you're a small business, maybe you're below the threshold, so you don't have to issue VAT invoice, or maybe you're selling just domestically to private individuals in Ireland, so you might just issue receipts rather than invoices. But, like, to reclaim from it, like, you're still supposed to be able to receive e-invoices from an AP perspective in 28 to then help support your recovery. If you're not going to reclaim, well, I don't know, maybe you should look at it, because if you actually are providing a VATable service or goods, then potentially you could have an entitlement to reclaim. So it's worth looking at.
Thanks for that. And look, we'll go one last question.
Sure.
It's more a statement, but your thoughts will be welcome on it. It sounds like we need to proactively talk to our accounting software provider to ascertain if our current system will be able to deal with ViDA, or at least ask what needs to be done to make the systems capable.
Yeah, look, without doing the EY plug for a second, like that's what we're talking to a lot of companies about at the moment is how ready is your system and what service provider you're on, and could you leverage, just will they have their own solution or do you need to get an outside solution like ourselves or whoever? And am I impacted by invoicing more globally? Should I look at a global service provider, or is it very nuanced to Europe? But yeah, it's about, I would say having a conversation, but also leveraging your own IT team and saying, we need to have this high on our agenda. We're going to need to put a budgetary plan and support, timetable around it. But I think if you took nothing else away and said we're going to reach out to our service provider, IT service provider, it's a good start.
Yeah. Great. Well, look, James, thanks very much for answering
Great.
all those questions of your presentation. On behalf of SEMA Southern Region Committee, just to express our gratitude and appreciation for the effort you put into this, for your time today, but also the months of effort and conversation that you and I have been having kind of from the time I first approached you for this presentation. The idea for this presentation was originally raised by a now unfortunately deceased member of the Southern Region Committee, a gentleman called Kodzo Salormi, and just to acknowledge that Kodzo passed away earlier this year. He was originally, this was originally his idea, and I'm delighted to be able to bring it to fruition with yourself today, James.
Great, no, thanks very much.
And look, on that point there, it's going to hand back to Jean just to wrap things up. And thank you all for your attendance this afternoon.
Lovely, thanks a million. So thanks, James, on behalf of SEMA of Ireland, Ireland even, and thank you for your very detailed presentation and invaluable advice. We really appreciate your expertise on this subject. And Diarmuid, thank you for your time. We appreciate your participation with preparations. So before we do sign off today, I'd like to draw your attention to our upcoming CPD webinar scheduled for Tuesday, the 9th of December. Protect's partners from Summer Northern Ireland will share their updates following the UK Budget 2025. So please scan the QR code to register, and I'll include the link in the follow-up email also. So again, as Diarmuid said, thank you all for attending. We hope we found it beneficial, and I'll send the recording shortly. Thanks, James. Thanks, Diarmuid. Take care.
Everyone.
Bye now.
Thanks, Jean. James. Bye-bye.